What's going on, traders? In this video, we're going to go over what institutions are doing this upcoming trading week. What are they looking at? Are they looking at puts? Are they looking at calls? And if so, what strike prices am I looking at? What contracts am I looking at? And so we're going to go over all of that because I get asked this question a lot. And so we're going to look at the SPY, we're going to look at the triple Qs, and then we're going to look at the options chain and see what these guys are doing in regards to trading this upcoming trading week or these next few weeks. Before we start, like, subscribe, comment your thoughts below. Let's get straight into it. So right now we're looking at the SPY 4-hour time frame. We talked about this rising wedge pattern, and right now we're breaking below the rising wedge pattern. Now I said this in the last video, and it keeps going over a lot of people's heads in the comments and a lot of trolls in the comments. I've said this before. This break is not yet convincing. Okay, it's not yet convincing until we break below 602. That is when this break will be convincing. Why 602? Because right here is where you want to stop these guys out of their position in regards to the SPY. If we break below 602, then we're heading to 600, and then after that 598. I said this in the last video, and this is something else that went over a lot of people's heads. As long as 598 holds, if you're bullish, there's a good chance that you're going to see a bounce back towards previous highs and possibly even higher than that. Possibly. So again, if you are bullish, you want to see 598 hold. If you are bearish, you want to see this get destroyed. Okay. Now, if you're bearish, and I said this before, okay, I did mention this target before. If you break below 598, there is a good chance you're heading towards 570s. Why 570s? That's such a crazy number. Why would you say such a random number? Bear with me here because this is where things get really interesting. So bear with me, okay? So we go to the daily time frame here. Daily time frame, and this is why I say the break is not yet convincing, because on the daily time frame you're still within this rising wedge. So, make sure you keep that in your head before cherry picking information. But this gap down here, you have an island reversal gap down here. You have two gaps next to each other simultaneously. You have a gap here and another gap here. Now, this is the number I want you guys to remember: 576. 576. This is where this gap is. 576. And so we look at the options chain for the SPY. And so we go to December 12th. Unusual whales, by the way, link will be in the description below if you want access to this options chain. 576. Look at this. Whales are trading 576 puts for January 17, 2025 with a 5.35 million premium and a 100% ask over bid. Anytime you are trading contracts, you want to make sure the ask is higher than the bid. Either you trade at the ask or you trade above the ask. And so you have a 25,000 ask over a 77 bid. Again, the strike price for this contract is 576. We go back to TradingView. Would you look at that? 576 gap deal. I don't know. The math is mathing so far. 2 plus 2 equals 4, and things are looking a little shaky here, okay? So that's what I want you guys to pay attention to if we just so happen to break below 598. Now, if we do break below 598, obviously there's targets you want to look out for before that. And so you can start heading towards 592, and then after that, 590 psych level, and then 585 will be your main target to be held before you head towards 576. You break below 585, 584, then you're looking at a move towards this gap fill. So interesting enough, whales are trading this 576 put right here. But maybe that's not enough. So we go to Quant data. Link will be in the description below, by the way. And so we're gonna do some little adjustments here. So we're looking at Quant data, and so we're going to change the date to. Bear with me here. This takes a long time to load because there's a lot of information. So we're going to December 12th. All right, and then we're going to the January 17th expiration. Link will be in the description below if you want access to this. And then we're going to look up the 576 contract or strike. And would you look at this? So, same premium, 5.35 million premium, absolutely no calls behind this. I'll say not premium, but 5.35 puts premium. And then you have like 0 calls behind this. And so we click here and we give it a moment to load. It takes quite a while to load. And as you guys can see, these are the institutions that are trading this. Here you go, exchange, and there you go. I mean, nothing but blood in the streets when it comes to this contract. So you see the strike price here, you have 576, 576, you have a put, and then you have premium of 1 million, 1 million, 500K, 500K, 300K, 300K, bearish, 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 and then you have the exchanges here. Again, you want access to this information. I use this information to help me trade a lot. Link will be in the description below. And so we have more confirmation that we might see a massive drop come January. Okay, I'm not saying it's happening this week or anything, but maybe in January we can see a move all the way towards that gap fill. So the math is really, really mathing here. Okay, so we go back to the SPY and everything is adding up for a potential drop here. And so let's go back to unusual whales and let's go to Friday and see what whales are expecting to happen this upcoming trading week. All right. So we do have some calls, but we have majority puts. Okay. We have a lot of puts coming in here. So let's look at the calls. So we have 605 calls for December 16th, which is tomorrow. Okay. And again, you want to make sure the ask is higher than the bid. So you have 51,000 ask over a 47,000 bid. You have a 9.98 million premium. So there's a good chance that this play will play out. Okay. But then you have a lot of puts. You have 604 puts, 603 puts. You don't have anything too dramatic in regards to the put size. It's just pretty much the levels we've been talking about, 602, 600, 598. But you don't really have anything in the 500s for this upcoming trading week. So there's a good chance that we do see 598 hold. Now, you do have 590 puts for January 31st, 2025. And so you zoom over and you have a 1 million premium, nothing too crazy. No, actually you have a 3.76 million premium with a 5,000 ask over 600 bid. So something to pay attention to there. So January might be shaky. Okay, we might want to pay attention to January. And then another one, you have 598 puts for December 20th. 1 million premium. Okay, 1 million premium. All right, 1 million premium, and then you have a 4,000 ask over a 2,000 bid. Okay. Now, in my experience, anytime you see these type of contracts in general, just all of this, generally the market goes below these contracts or above these strike prices, depending on the direction. So, for example, if you have 604 puts, then chances are you're going to head below 604. It's not exactly going to hit 604 and then just bounce from there. Chances are you're going to head below that. But as you guys can see, you're seeing a lot more puts flood the gates than calls in regards to the SPY. I don't know. Maybe I'm wrong. So I said this before. Anytime you're following a Discord host or a YouTuber or somebody on Twitter, you want to make sure they're using an options chain. Why? Because options chains tell you what institutions are doing. These are the guys that move the market. These are the guys that have the capital to move the market. Those big moves that you see to the upside and to the downside based on whatever CPI data or earnings. Those are institutions. Those are whales. Okay, those are hedge funds, whatever you want to call them. I just showed you guys on Quant data the exchanges that are trading these 576 puts on the SPY. I probably should just stop going on this because it takes forever to load. But regardless, you're seeing that. Okay, you're seeing that in real time. Not too many people have access to this type of information here, and I'm showing you guys this. Or they won't even show you guys this information. But here you are. I'm showing you this information, and I'm showing you guys that you want to be cautious these few weeks coming up heading into January because you have a lot of puts coming in. But maybe this isn't enough. Maybe you need some more. Let's look at the triple Qs. Now, I will say in regards to the triple Qs, okay, the triple Qs, I've said this before, triple Qs looks a little bit more bullish, okay? It does, okay? Looks a little bit more bullish. This can obviously change, but it's still holding below above the smaller rising wedge pattern. We talked about this, so there is a good chance that we can head towards 534, between 534 538 as our target, somewhere up here towards this much bigger rising wedge pattern. But let's see what the whales are doing. Okay, let's see what the big guys are doing. So we look at triple Qs, and I didn't look for a contract in regards to December 12th, so we'll look at that. But as you guys can see, a lot more puts coming in on the triple Qs than calls. Okay, a lot more puts coming in than calls. 528 puts, 530 puts, and so you want to see the triple Qs hold 527. So you do have 527 puts. So let's look at the actual ask over bid for this one. So you have a 2.29 million premium, and then you have a 10,000 ask over a 9,000 bid. 530 puts. So the 530 puts, you do have a higher bid than ask, so that's a good sign for bulls. And then you have 528 puts, which is a bad sign for bulls. You have a 39,000 ask over a 31,000 bid. So these all expire for mostly December 16th, and then you have some obviously in the further out future. So you have 525 puts with a 3.48 million premium. and then you have a higher bid than ask. So that's a good sign. So there's a chance that 525 can hold this upcoming trading week. Okay, so again, um, a lot more puts than calls coming in for this upcoming trading week. And so we look at what happened on Thursday. Let's see if we can find something that relates to what we just saw on the SPY in regards to those 576 puts. Nothing crazy just yet. I guess we have these 510 puts for February 21st, 2025 with a 4.81 million premium. And then you have 525 puts for January 31st, 5.35 million premium. And then your ask, let's zoom over here. And then you have a 99% ask over bid. So you have a 5,000 ask over a 30 bid. So something to pay attention to. So that's what I'm looking at in regards to the triple Qs. I mean, we look at the VIX. Actually, we'll look at the VIX for the 13th. This thing is lying. There was definitely calls for VIX. There we go. All right, so we have calls coming for the VIX. Interesting enough, because someone told me, let's actually look at the chart for the VIX. Someone told me you can't plot the VIX. You know, it's just impossible. You know, people say this all the time, and I just don't know where they're getting this information from. I mean, the VIX has never done me wrong in regards to plotting it. The last spike it had, I pretty much called it out just based off plotting it. You can feel free to find that video. I don't know where that video is anymore. It's somewhere around there in the YouTube. But regardless, you have 35 calls for March 18th, 2025. I don't have my glasses. But regardless, you have a 100% ask over a bid, 41,000 ask over an 82 bid, and you have a 3.887 million premium. Something to think about here. But let's look at these contracts up on Quant data, right? So what do we have? We have 35 calls for March 18th. So let's look that up. So we go to Quant data. Once again, the link will be in the description below. I highly recommend you have this type of information at your side. Pretty expensive, but I think it's well worth it. VIX. So we type in the VIX. We type in the expiration. And so the expiration was what? March 18th, I believe. March 18th, right? And so you have 35 strike. All right. And so all you do, whoa, that's massive. All right. So all you do is you look this up. So nothing in for this. Oh, actually, I have the wrong expiration date. What was this? The 12th? Yeah. So we're looking for the 13th. Here we go. I was like, wait a minute, something's wrong here. So here we go. All right. So now we found these contracts, 3.87 million premium in calls. And so we click on this here. Now, would you look at that? Ask, 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 ask. 2.73 million premium, bullish calls, expiration March 18th, 2025. And then you see the exchange that is trading this. I don't know. And so we look at this falling wedge. I told you guys about this falling wedge, and you are currently breaking out. The break is not yet convincing. You want to see a little bit more upside. One of my targets for the VIX is 16, 18, and then highs we're looking at is about 20 in the short term. You'll be looking at this gap fill at the $20 range, or 20 strike range, I should say. And then from there, you might see a move towards 35. We'll see. Okay. But something to pay attention to in regards to the VIX. But apparently you can't plot the VIX. I don't know. But either way, things are looking a little shaky for the next few weeks. Will we get a Santa rally? I can't say for sure. I'm not counting on one considering how much we ran. Someone said I don't look at seasonality, even though I literally said like the past three videos that Santa rallies typically happen after Christmas versus before Christmas. And you do get a sell off before Christmas. Majority of the time, you get a sell off. So I don't know. Regardless, things are looking a little bit shaky, guys. Hopefully, you guys learned something here. Hopefully, it's making sense. Pay attention to that 576. You're free to look this information up yourself on Unusual Wells. Quant data, the link will be in the description below. And if you're following a YouTuber or a Discord host or whatever the case may be, and they're not using an options chain, I wouldn't trust them. That's just me. I wouldn't trust the plays they put out. That's just me. All right, you do what you want. Maybe they're winning, maybe they're being successful, but I can tell a lot of you in the comments don't use options chains because a lot of you are arguing with me. But I mean, you can't argue with the big guys. You just pretty hard to do. We'll see. I'm sure you're going to do it anyway, but regardless, hopefully you guys got something out of it. Discord link is in the description below if you want to see how we're going to trade this upcoming trading week. Start enjoying your holidays, start looking for time off, so on and so forth. And until the next video, traders, you have a good one.